Hello everyone. Today, I want to tell you a story. Why trading is a waiting game and patience is your real edge. Do you know what the hardest part of trading really is? It is not finding the perfect indicator. It is not learning some complicated strategy. It is not sitting in front of your screen for 10 hours a day. And it is definitely not trying to predict every single move the market makes. The hardest part of trading is something most people never expect. It is doing absolutely nothing. That sounds strange, right? Because when most people enter the market, they believe a real trader must always be active, always analyzing, always looking for opportunities, always opening positions, always doing something. But the truth is completely different. Most traders do not lose money because they know nothing about charts. They lose money because they cannot handle waiting. They lose because every time the market moves, they feel the need to jump in. They lose because when they see someone else posting profits, they feel left behind. They lose because after sitting on the sidelines for a few days, they start believing they are missing the biggest opportunity of their life. And that feeling, the feeling that you must do something, is exactly what destroys trading accounts. Trading does not reward the person who takes the most trades. Trading rewards the person who knows when to wait. You can know every pattern in the book. You can understand support and resistance, supply and demand, liquidity, market structure, order blocks, fair value gaps, trend lines, volume, and every technical concept out there. But if you do not know how to wait, all that knowledge can become dangerous. Because once you know too much, you start seeing opportunities everywhere. A strong bullish candle appears, and you think it is a breakout. Price pulls back a little, and you think it is a perfect entry. The market touches an old level, and you call it support. Someone on social media posts a chart, and suddenly you think they know something you do not. And then you enter the trade. Not because your plan told you to. Not because your system confirmed it. Not because the risk is worth the potential reward. You enter because you are afraid of missing out. At that point, you are no longer trading. You are reacting emotionally. And the market is very good at punishing emotional decisions. Think about a lion hunting on the savannah. A lion does not chase every animal it sees. It does not waste energy running after the strongest, fastest, healthiest target in the herd. It waits. It watches. It stays calm. It waits for the weak one, the isolated one, the moment when the odds are in its favor. And when the time is right, it strikes. Fast. Clean. Precise. That is exactly how a trader should behave. You do not need to catch every move. You do not need to trade every day. You do not need to be involved in every rally, every drop, every breakout, every reversal. You only need to recognize the opportunities that truly belong to your system. And here is the uncomfortable truth. Most of the time, those opportunities will not be there. That is why profitable trading often feels boring. If your heart is racing every single day, if you are constantly opening and closing trades, if every candle makes you emotional, then you may not be trading like a professional. You may be addicted to action, addicted to pressing the button, addicted to seeing a position open, addicted to the feeling that you are participating in something important. But the market does not pay you for excitement. The market rewards discipline. And sometimes discipline means sitting there, watching price move, and doing nothing. There will be days when you open your charts, analyze everything, mark your levels, wait patiently for hours, and take zero trades. A beginner sees that as a wasted day. A professional sees that as a successful trading day. Because you protected your capital. And in trading, not losing money is already a victory. Many traders are obsessed with making money. But before you can make money consistently, you must learn how to stop destroying your own account. You cannot win a long-term game if you keep making short-term emotional mistakes. And one of the most common ways traders destroy themselves is overtrading. When you are new, it feels logical to believe that more trades mean more opportunities to make money. One trade can make money, so 10 trades should make even more, right? Wrong. Every trade is not only a chance to win, it is also a chance to lose. Every time you click buy or sell, you are putting your capital at risk. If that trade does not have a real edge, then you are not trading. You are gambling. An impatient trader usually does not lose everything from one big bad trade. They lose from dozens of low-quality trades. One trade because they were bored. One trade because price moved fast. One trade because they wanted revenge after a loss. One trade because they just won and felt unstoppable. One trade because someone online said the market was about to explode. One trade because the setup looked kinda good. Each one seems small, but together, they slowly bleed the account. You may have a good strategy. You may get 2 or 3 high-quality setups per week. But if you add 20 emotional trades around those few good setups, you destroy the results of your own system. That is why many traders say, this strategy does not work. But when you look at their trading history, the strategy was not the real problem. The problem was that they only followed the strategy part of the time. The rest was emotion. FOMO, revenge trading, random entries, influence from social media, or changing the rules whenever they felt uncomfortable. A trading system only has value if you actually follow it. No strategy can save a trader who has no discipline, and no discipline can exist without patience. Waiting is not weakness. Waiting is power. Beginners think good traders are always predicting the next move. Experienced traders understand that the real skill is knowing when not to play. It is like poker. A good poker player does not play every hand. They fold again and again. They do not feel like a failure because they skipped a bad hand. They understand that money is made not only by betting at the right time, but also by refusing to bet at the wrong time. Trading is the same. You do not need to be right all the time. You do not need to catch every move. You do not need to win every day. You only need the discipline to act when probability is on your side. And for that, you need your own system. Not a system you copied blindly from someone else. Not a strategy you bought from a guru. Not a signal from a group chat. Not a method you saw in a 10-minute video. You need a system you truly understand. You need to know why you enter. You need to know when not to enter. You need to know what conditions must be present. You need to know what invalidates the setup. You need to know how much you are willing to risk. You need to know where you will exit. You need to know what you will do if the trade wins. And you need to know what you will do if the trade loses. That kind of system is not built from excitement. It is built from testing, journaling, experience, mistakes, review, and refinement. You can learn ideas from other traders. That is completely normal. But you cannot blindly copy another person's system and expect it to fit your personality, lifestyle, schedule, and risk tolerance. Some traders can scalp because they have the time, speed, and emotional control to watch charts all day. But maybe you have a job. Maybe you have a family. Maybe you cannot sit in front of the screen for 8 hours. If you force yourself into a system that does not match your life, you will struggle. Some traders can handle a 20% drawdown because they have experience and emotional strength. But maybe you cannot sleep after losing 5%. If you copy their risk, you will panic when the first losing streak comes. Some traders can hold positions for days because their system is built for swing trading. But maybe you check the chart every 5 minutes and feel anxious every time price pulls back. That means the system may not fit you yet. Trading is not only about finding a profitable strategy. It is about finding a strategy you can actually follow. A great system that does not fit your personality can still make you lose money. Because when everything is calm, it is easy to say you will follow the rules. But when real money is on the line, when the trade is negative, when other people are showing profits, when the market moves fast against you, that is when you find out whether the system truly fits you. This is why backtesting and forward testing are so important. Not only because they show whether a system can be profitable, but because they build conviction. Confidence in trading cannot come from someone telling you, "Trust me, this strategy works." Real confidence comes from seeing the system work with your own eyes across hundreds of examples. You have seen it win. You have seen it lose. You have seen losing streaks. You have seen recovery. You have seen it perform well in trending markets. You have seen it struggle in choppy markets. You understand the system deeply enough that one loss does not shake you. You do not abandon the strategy after 2 losing trades. You do not doubt yourself after 1 quiet week. You do not jump to a new method just because someone else posted a winning screenshot. You understand that trading is a long game. 1 trade means very little. 10 trades may still mean very little. What matters is a large enough sample size. But most traders are too impatient to get there. They try a strategy for 3 days and quit. They watch a new video and immediately change everything. They win a few trades and increase their risk. They lose a few trades and switch methods again. They jump from one idea to another year after year, never staying long enough to master anything. You cannot build a strong foundation if you keep changing the ground beneath your feet. Another dangerous trap in modern trading is outside noise. Today, traders do not suffer from a lack of information. They suffer from too much information. You open your phone and one person says gold is going higher. Another says the market is about to crash. Someone else says the dollar will reverse. Another trader posts a chart with confidence. Another person has thousands of followers and speaks like they know the future. And suddenly, your own analysis starts to feel weak. You were waiting for your setup. Everything matched your plan. But then you saw an opposite opinion online. It tests your greed. It tests your fear. It tests your ego. It tests your ability to accept being wrong. It tests your ability to stay still when there is nothing to do. Many people fail not because they are not smart enough, but because they are not humble enough. They want the market to obey them. They analyze and say, price must go down. But the market does not care what you think. If price goes up, they get angry. If price moves sideways, they get impatient. If price hits their stop loss and then goes in their direction, they feel betrayed. And then they try to take revenge. But the market is not your enemy. It is not your friend either. The market is simply the market. It moves based on liquidity, money flow, expectations, news, emotions, and countless factors you cannot control. Your job is not to force the market to do what you want. Your job is to wait until the market gives you an opportunity where your edge is present. Then manage your risk. That is it. Simple, but very difficult. To trade well, you must give up the need to always be right. You do not need to be right to make money. You need a system where your winners are large enough, your losses are controlled, and your behavior is consistent. A trader can win only 40% of the time and still be profitable with good risk to reward and discipline. Another trader can win 70% of the time and still lose money if their losses are too large or their risk is uncontrolled. Trading is not a contest of prediction. Trading is risk management. And impatient traders usually manage risk poorly because they enter before the setup is complete. Their entry is weaker. Their stop loss is worse. Their reward is smaller. They take lower quality trades and expect high quality results. That is a losing formula. Patient traders do the opposite. They wait for better entries. They accept missing the move if price does not come to their level. They play stop losses for a reason. They only enter when the potential reward is worth the risk. They do not beg the market for trades. One of the biggest signs of maturity in trading is this. You can watch a big move happen without you and feel completely fine. In the beginning, missing a move hurts. You think, I should have been in that. But later, you learn to say, that was not my setup. That calmness is worth a lot of money. Because FOMO is one of the most expensive emotions in trading. FOMO makes you buy near the top because you are afraid price will keep going. FOMO makes you sell near the bottom because you are afraid the market will collapse further. FOMO makes you ignore your plan. FOMO makes you increase risk. FOMO makes you enter when the best opportunity has already passed. And that is the dangerous part. Your strongest emotions often appear after the market has already made a big move. When the best entry is gone, your desire to enter becomes strongest. That is when you are most likely to make a bad decision. A professional understands that missing a move is not the problem. Losing money chasing it is the problem. There will always be another trade. Always. The market is not going anywhere. But your capital is limited. Your mental energy is limited. Your confidence is limited. Every emotional trade does not only cost money. It costs clarity. It makes you doubt yourself. It pulls you into a cycle of mistakes. One FOMO trade can lead to revenge trading. One revenge trade can lead to increased risk. Increased risk can lead to a major loss. And one uncontrolled day can destroy weeks or months of discipline. That is why protecting your mental state is just as important as protecting your account. You cannot make good decisions with a chaotic mind. This is why serious traders need routine. Not a fancy routine to look professional. A real routine that helps you stay stable. Wake up at a consistent time. Do not rush straight into the charts while your mind is still foggy. Review your plan. Mark your important levels. Define your scenarios. Set alerts. Step away when there is nothing to do. This simple structure is powerful because it turns trading from emotional reaction into a process. You are no longer sitting there trying to force a trade. You know exactly what you are waiting for. You know when to act. And you know when to stay out. A good routine reduces decision fatigue. You do not constantly ask yourself, should I check the chart? Should I enter? Should I exit? The rules are already defined. The fewer emotional decisions you make, the fewer mistakes you create. And the more balanced your life is, the better you trade. Many people fail because they make trading their entire identity. When they win, they feel amazing. When they lose, they feel worthless. When there is no trade, they feel empty. When they experience drawdown, they question everything. And now you start doubting yourself. What if I am wrong? What if they know something I do not? Maybe I should close early. Maybe I should reverse my position. And just like that, you break your plan. But ask yourself this. Does that person know your system? Do they know your entry? Do they know your stop loss? Do they know your time frame? Do they know your account size? Do they know your risk tolerance? Do they know why you entered? If not, why are you letting their opinion control your money? Learning from others is good, but letting others make decisions for you is dangerous. Before entering a trade, you need a plan. After entering a trade, you need to respect that plan. If your plan says you exit only at stop loss, take profit, or when your invalidation condition appears, then a social media post should not be enough to make you close the trade. Because if you keep allowing the crowd to pull you in every direction, you will never know why you win or lose. And you cannot improve what you do not control. Professional traders are very careful about the information they consume. When they are in a trade, they do not desperately search for confirmation. They do not ask a group chat whether they should hold. They do not let news headlines replace their trading plan. They look at the chart. They look at the system. They look at the risk. And they execute. Simple, but not easy. Because human beings hate uncertainty. When a trade is open, you want certainty. You want to know it will win. But trading never gives you certainty. It gives you probability. You cannot control the outcome of a single trade. You can only control the quality of your decision before entering. That is a huge difference. Beginners judge themselves by short-term results. If they win, they feel smart. If they lose, they feel terrible. Experienced traders judge themselves by process. Did I follow my rules? Did I control risk? Did I enter only when the setup was valid? Did I exit according to plan? Did I break discipline? A winning trade taken outside your plan can still be a bad trade. A losing trade taken perfectly according to your rules can still be a good trade. That may sound strange, but it is essential. Because if you reward yourself for lucky wins, you will repeat bad behavior. And sooner or later, the market will take the money back, usually with interest. But if you punish yourself for a good trade simply because it lost, you will lose confidence in your system. Trading is a game where good decisions do not always create good outcomes immediately. But over time, good decisions create an edge. This is why a trading journal is so powerful. Do not only record your entry, exit, profit, and loss. Record your thoughts. Before the trade, how did you feel? Were you calm? Were you anxious? Were you trying to recover from a loss? Were you overconfident after a win? Did you take the trade because the setup was valid or because you were afraid of missing out? During the trade, how did you behave? Did you move your stop loss emotionally? Did you take profit too early because you were scared? Did you stare at the chart too much? Were you influenced by social media, news, or other traders? After the trade, what did you learn? Did you follow your rules? If it lost, was it a normal loss or a discipline mistake? If it won, was it a quality trade or just luck? Your journal becomes a mirror, and many traders are afraid to look into that mirror because it reveals the truth. You may discover that you do not lack knowledge. You lack patience. You may discover that you usually lose money after a winning streak because you become overconfident. You may discover that after 2 losses, you start revenge trading. You may discover that your worst trades happen when you are tired, emotional, or bored. You may discover that you always cut winners too early because you are afraid of giving profit back. Once you see your patterns, you can fix them. Without a journal, everything feels vague. You say, I have been trading badly lately. But with a journal, you can say, I am losing money mainly because I take trades outside my plan, increase risk after wins, and exit too early from fear. When the problem becomes clear, the solution becomes possible. For example, if you know you become overconfident after 3 winning trades in a row, create a rule. After 3 wins, take a break or reduce position size. If you know you revenge trade after 2 losses, create a rule. After 2 losses, stop trading for at least 12 hours and review both trades before looking for another setup. These rules may not be part of technical analysis, but they may be more important than technical analysis. Because a profitable strategy means nothing if your psychology keeps destroying it. The market does not only test your knowledge. It tests your character. It tests your patience. That is too much pressure. Trading is a skill. It is a business. It is an activity with risk. It should not become the measurement of your entire self-worth. You need a life outside the charts. Health, family, friends, learning, exercise, rest, things that keep you grounded. A balanced person often trades better than an obsessed person. Because when you are not desperate to make money immediately, you become more patient. When every trade does not need to prove your value, you make clearer decisions. When you are not staring at every tick, you interfere less. Patience is not only a trading skill. It is a way of living. You must learn to slow down in a world that constantly pushes you to move faster. Social media wants you to react now. News wants you to panic now. Group chats want you to enter now. Flashing candles on the chart want you to click now. But the big advantage often belongs to the person who stays calm the longest. Remember this. The market is designed to make you feel like you must do something. A strong candle makes you want to chase. A stop hunt makes you want revenge. A sideways market makes you bored. A reversal makes you doubt yourself. A winning screenshot makes you feel behind. But you do not need to react to everything. You need to respond according to your plan. Reaction is emotion. Response is discipline. As you grow, you realize that most improvement in trading does not come from doing more. It comes from doing fewer wrong things. Fewer random trades. Fewer outside opinions. Fewer strategy changes. Fewer emotional entries. Fewer revenge trades. Fewer impulsive exits. fewer attempts to make back losses immediately. When you remove enough bad behavior, your real edge finally has room to work. A good trading system is like a seed. If you dig it up every day to check whether it is growing, you will kill it before it has a chance to become strong. You must give your system time. You must give yourself time. No one becomes a solid trader in a few weeks. The first years are often tuition. You are not only learning the market, you are learning yourself. You learn that you are greedier than you thought. You learn that you fear loss more than you expected. You learn that you are easily influenced by the crowd. You learn that you enjoy being right more than making money. You learn that discipline is easy to talk about, but hard to live. That is not failure. That is the process. Every mistake can become part of your education if you record it, study it, and stop repeating it. The problem is not making mistakes. The problem is making the same mistake for years. A mature trader is not someone without emotions. They still feel fear. They still feel greed. They still feel frustration. They still feel the urge to enter early. But they do not let emotions drive the car. Emotions can sit in the passenger seat. They can speak. They can warn you. But the steering wheel must stay in the hands of your system. When you feel the urge to enter, ask, does this setup meet my rules? When you want to close early, ask, what was my original plan? When you want revenge, ask, is this a real opportunity or just anger? When you want to increase risk, ask, is this based on data or emotion? One good question can save you from one bad decision. And sometimes, the most professional action is to close the laptop. No setup? Close the chart. Bad mental state? Close the chart. Broke your rules? Close the chart. Want revenge? Close the chart. Not thinking clearly? Close the chart. The market will still be there tomorrow. But if you lose control today, your account may not be. Protecting capital is not only about using a stop loss. It is also about keeping yourself away from situations where you are likely to make bad decisions. Some days, the best trade is no trade. Some weeks, the best action is observation. Some phases, the best move is reducing size and focusing on review. People online may not celebrate that. They prefer profit screenshots, big wins, and dramatic stories. But a real trading career is built in moments nobody sees. The moment you wanted to enter, but stayed out. The moment you wanted revenge, but walked away. The moment you wanted to follow the crowd, but trusted your plan. The moment you accepted missing a move. The moment you kept your risk small, even though you felt confident. The moment you took a loss and did not let it ruin the whole day. That is where a trader is built. Not in one big winning trade, but in hundreds of quiet decisions to stay disciplined. Eventually, you realize trading is not really a battle against the market. It is a conversation with yourself. You stop asking only, what will the market do next? You start asking better questions. If the market does this, what is my plan? If the market does that, will I act or stay out? If there is no setup, can I wait? If this trade loses, can I accept it? If this trade wins, can I stay humble? That shift changes everything. From prediction to preparation. From reaction to planning. From emotion to process. From wanting to be right to wanting to do the right thing. Once you understand this, trading becomes much clearer. You do not need to win every day. You do not need to prove yourself. You do not need to post screenshots. You do not need to catch every move. You do not need to feel busy. You only need to do the right things consistently. And in trading, the right things are often boring. Wait for the setup. Enter according to the plan. Manage risk. Journal. Review. Rest. Repeat. It is not glamorous. It is not dramatic. It is not what most people advertise. But that boring process is the edge. Because most people cannot follow it. They want excitement. They want action. They want quick results. They want every day to feel important. But if you want to last, you must learn to love simplicity. Love waiting. Love protecting capital. Love saying no to bad trades. Love following the process even when the outcome is uncertain. That is how you separate yourself from the crowd. Not with a secret indicator. Not with an expensive signal group. Not with a magical strategy that never loses. But with the ability to do what most traders cannot do. Sit still. Sit still when the market gives you nothing. Sit still when others are posting profits. Sit still when you just lost and want to win it back. Sit still when you just won and feel unstoppable. Sit still when your emotions are screaming, but your system says, not yet. That is strength. Not loud strength, quiet strength. The strength of someone who knows exactly what they are waiting for. And when the real opportunity appears, you are ready. You are not desperate. You are not chasing. You are not emotional. You have waited for this. You know your entry. You know your invalidation. You know your risk. You know your target. You act not because of emotion. You act because your plan has reached the moment of execution. That is the difference between an impulsive click and a professional trade. Both may look the same from the outside. Both may be a buy or sell order. But one comes from fear. The other comes from discipline. In the short term, either one can win or lose. But over time, the difference becomes clear. The impulsive trader survives on luck until luck runs out. The disciplined trader survives on edge, and edge only needs time to show itself. So the next time you open your chart and see no setup, do not think you are wasting time. Tell yourself, I am protecting my capital. The next time the market makes a big move without you, do not blame yourself. Tell yourself, that was not my trade. The next time someone posts profits online, do not compare. Tell yourself, I do not know their risk. I only need to follow my path. The next time you lose a trade that followed your rules, do not break your system. Tell yourself, this is part of the game. The next time you win, do not become arrogant. Tell yourself, I followed the process. Stay humble. Trading is a long game. And in a long game, survival comes first. You cannot take advantage of future opportunities if you destroy your account today. Your first job is not to get rich quickly. Your first job is to survive. Survive long enough to learn. Survive long enough to understand yourself. Survive long enough to collect data. Survive long enough for your edge to repeat. Survive long enough for compounding to work. Compounding does not reward impatience. It needs time. It needs consistency. It needs you to avoid big, destructive mistakes. Slow and steady growth may not look exciting online, but in real life, it can be powerful. A trader who grows steadily over years is very different from a trader who makes 30% in 1 month, loses half the account the next month, then starts over again. Trading does not reward the person with the most exciting month. It rewards the person who can return to the market year after year with capital, clarity, discipline, and confidence still intact. So remember this. You do not need to be the smartest person in the market. You need to be more patient than most people in the market. You do not need to know everything. You need to know exactly what you are looking for. You do not need to trade every day. You need to trade the right days. You do not need to win every trade. You need to lose small, win well, and stop destroying yourself in between. Trading is a waiting game. Waiting for the setup. Waiting for confirmation. Waiting for the right entry. Waiting for the trade to play out. Waiting for your system to prove itself over time. Waiting for yourself to mature. Beginners hate waiting because they think waiting means missing out. Professionals respect waiting because they know waiting is selection. Waiting is not being outside the game. Waiting is part of the game. And sometimes, it is the most important part. So, before you ask, what trade should I take? Ask yourself, do I really need to take a trade? Before you ask, how can I make more money? Ask, where am I losing money through bad behavior? Before you search for a new strategy, ask, have I truly followed my current strategy long enough to judge it? Before you listen to someone else's opinion, ask, Do they know my plan, my risk, my system, and my time frame? And before you click buy or sell, ask the most important question. If this trade loses, will I still be proud of the decision because I followed my process? If the answer is no, maybe you should not take the trade. Because in trading, you cannot control the market, but you can control your standards. And your standards will shape the future of your account. One day, when you look back on your trading journey, the thing that changed everything may not be a new indicator. It may not be a secret setup. It may not be one perfect trade. It may be the moment you learned how to sit still. The moment you realized that doing nothing is also a decision. The moment you understood that a good trader is not someone who always has a position open. A good trader is someone who has a clear reason for every position they take. The moment you stopped chasing the market and started letting the market come to you. That is when you begin to mature. Mark your levels. Write your plan. Set your alerts. Manage your risk. Then step away when it is not time. Do not trade because you are bored. Do not trade because of FOMO. Do not trade because you want to prove something. Do not trade because everyone else is trading. Trade because your tested system says the opportunity is here. And when that opportunity comes, act with the calm confidence of someone who is prepared, not with the panic of someone who is afraid of missing out. The market will always be there. Opportunities will always return. But your capital, your clarity, and your confidence must be protected every single day. Trading is not the game of the person who clicks the most. Trading is the game of the person who waits the longest, chooses the best, and acts with conviction when the right moment finally arrives. If you can master waiting, you can transform the way you trade. You will change how you see the market, how you see money, how you see risk, and most importantly, how you see yourself. Because in the end, the market does not only teach you how to make money. It teaches you patience. It teaches you humility. It teaches you how to control your ego. It teaches you how to accept uncertainty. It teaches you how to move forward after losses. It teaches you that sometimes the greatest strength is not moving faster than everyone else. Sometimes the greatest strength is standing still, while everyone else is rushing into chaos. And if you can do that, you already have an edge that many traders never develop. Be patient. Protect your capital. Trust your tested process. Let others chase the noise. You wait for your signal. Because in trading, the winner is not always the person who sees the opportunity first. The winner is the person calm enough to wait for the right opportunity, disciplined enough to ignore the wrong ones, and brave enough to act when the real moment appears. That is the real edge. And that is the game you must learn to win. Now I want to hear from you. Do you agree that patience is one of the most important skills in trading? Or do you think there is another skill that matters even more? Share your thoughts in the comments below. And if this video gave you value, make sure to hit the like button, subscribe to the channel, and turn on notifications so you do not miss the next videos. Because on this channel, we do not just talk about trading strategies. We talk about the mindset, discipline, and patience required to survive and grow in the market. Thank you for watching, and remember, do not trade more. Trade better.